This is an area where we frequently see people really screw up. Business owners focused on the business, making money, producing the widgets and selling them, and all the wheels turning in the machine. Pay attention. There's things you gotta do, and if you don't do it, you or your business can be in trouble. Hi, this is Rick Durfee. We're here today to talk about corporate and entity compliance. With your entity compliance, we have 3 different bundles of documents that you need that perform related but different functions, and each one is essential for its own reason. The first are what might be called the birth certificates for your entity, things that prove that your entity, in fact, came into existence and that it's real. And this includes the articles that you file with the state authority. Most states, that's going to be a Secretary of State, sometimes a Corporation Commission or another state entity. And then you need a letter from the IRS with the EIN. Banks, title companies, others will ask for these documents, and if you don't have them, you don't exist. And if you don't legally exist, you don't have the legal protection you think you have. And then most states require some kind of annual filing. There's an annual report where you have to disclose changes in ownership, changes in management, and a lot of states will also have a franchise tax. Just because you have a legal entity in that state, you have to pay a tax. And watch out, there are many municipalities that charge a similar tax. If you don't pay the tax in that city or county or local government, there can be penalties. And if you skip this, of course, your entity can be either dissolved automatically or incur penalties. And the last thing on this are tax reporting documents. Depending on your tax status, whether you're taxed as a pass-through entity or as a C Corp or as an S Corp or as a partnership, you need to do the appropriate tax return, an 1120, an 1120S, a 1065. And even if you're a disregarded entity which gets taxed as a sole proprietorship, you need to pick up that activity on your Schedule C of your personal tax return. And of course, if you have employees, you need to do the payroll tax filings, the 941s and the 940s. And all those numbers are creatures of the tax code. And by the way, the IRS never forgets if you don't file these reports, and they charge interest and incur penalties. So you got to keep the government happy. You got to comply with all the requirements so your entity comes into existence, so it stays in existence over time, and that you keep the tax man happy. Now, there are a bundle of documents or entity compliance things that you got to do to save your assets in the company or to protect your assets from the company. So this is something that gets skipped a lot for some reason. People say, oh, I have an LLC, and they don't have an LLC. They might have filed with the state authority, but they don't have the governing documents. Those governing documents will consist of an operating agreement for an LLC, bylaws for a corporation, and these are the rules by which your entity operates. And if you do not have those documents that you have set up in most states, statute kicks in. And the statutory rules are tricky for several reasons. Number one, most people don't know what they are. Number two, they're not always in your best interest. So it's better for you to intentionally, deliberately craft your own governing documents so that they do what you want to do instead of deferring to whatever the politicians decide you might want to do if you didn't bother to make a decision. The other thing that has to happen, depending on the type of entity, is annual meetings with minutes. Now, for some entities like corporations, these are actually mandated by statute. You have to do it. And if you don't do it, that's an infraction or a failure to comply that can result in piercing the corporate veil. For other entities like LLCs or limited partnerships, it's just a good idea. It gives you enhanced asset protection because you're actually functioning like a business. It gives you enhanced ability to survive a tax audit because you can show there were business purposes for what you were doing and you will have appropriate documentation for it. And oh, by the way, it just helps you operate your business better. And if you don't have these documents in place, again, it's a failure to comply with applicable rules that can render that entity vulnerable to piercing the corporate veil, getting inside the entity, or failing to keep something out of the entity, which can create some liability issues. Now, the next bundle of entity compliance things is kind of the money trail. This is where you have to do the accounting. You have to balance your checkbook and reconcile your statements. You need to prepare financial statements and have a general ledger, and avoid commingling your personal expenses with your business expenses. This is an area where we frequently see people really screw up. They treat the business or the entity checkbook like their personal checkbook, and they buy personal things that just have no business being there, which again creates a vulnerability and subjects that entity not only to tax problems, but it compromises the asset protection so it can be vulnerable to an attack from a third party. So this is how you stay protected. And once again, if you don't have financial statements, and if you're not looking at them and interpreting them and understanding what they mean, what those numbers on that paper and those columns mean, you don't really have a business. You're not really running your business. You're just winging it. And then, of course, you need a paper trail for everything you have going on with your business activity. You need to have contracts. You need to have invoices. This is part of creating a tax file. You want to be audit ready when you prepare and file your tax returns, so that if the IRS knocks on your door and says, prove that these expenses are real, you have paper in your file that can prove that. Something I always believe in, it's a trust but verify doctrine. You can say something happened, but if you don't have an actual piece of paper or a receipt or a digital copy of such a piece of paper verifying that a transaction or event occurred, it didn't really happen. The things that really happened are the ones we can produce evidence to show that they happened. And once again, you got to keep the government happy. You got to keep the plaintiffs out of your castle, so they can't come in and storm your castle and take the stuff inside your company when you don't want them to. Now, other documents. If you have an operating business, odds are you either have employees or contractors that work for you. So you need to have the appropriate forms for them. I-9 forms for every single employee. W-4 forms for every single employee. You've got to have 1099s and all those tax reporting forms if you're paying contractors. As a legal firm, we get a truckload of 1099s every year because guess what? Your legal fees aren't deductible if you don't give the law firm a 1099. That's true for a lot of other services too. You want that tax deduction, you want it to be defendable on your tax returns, you gotta do the paperwork. And you need to have those documents in place for your employees so they can't turn around and bite you. Oh, thank you for the job. Thank you for the paycheck. You didn't do your documentation. I'm going to sue you. So as part of that, you need to have your offer letters, any employment contracts, and performance reviews and disciplinary records and all that kind of stuff, just so that you can prove what happens. If all you rely on is he said and she said this or that, that fails. The documents prevail. So you got to have documentation. And if you happen to live in a right to work state, even like the state where we happen to be in, where you have the right to terminate an employee at will, it's still a good idea to have some form of written agreement as to the terms of your employment so that you don't have ambiguity. It's not in question. It's not in doubt. You know what it is. And you're not, again, defaulting to whatever the statute may fill in the blanks for because you didn't bother to document your deal. And then, of course, when you have an employee leave, there's documentation you need to put in your file. COBRA notices for employees that leave, the final paycheck documentation. What's the deal? Are they going to get a week or 2 weeks of pay? Are they going to file or sign some kind of a release that says, yeah, I got everything I'm entitled to and I'm not entitled to anything more? Wrongful termination lawsuits, even if you win, can cost tens of thousands of dollars. I've seen silly lawsuits that shouldn't have been filed that the employer ultimately won, but the cost was extraordinary. So you gotta put all that documentation in place to protect your entity. This is a kind of a drive-by overview of entity compliance. It's been our observation working with hundreds, maybe thousands of business entities, that the business owners focused on the business, making money, producing the widgets and selling them and keeping everything working and all the wheels turning in the machine. And often that paperwork gets overlooked. So either you do it or you have an employee do it or you outsource it to someone, a law firm like us or other services like us that take care of that paperwork and compliance for you. Entity compliance. If you don't actually treat it like an entity. It's not an entity, and it's going to fail. Treat it like an entity, treat it well, and it will serve you well. We love to answer questions. Give us more, we'll answer them. Check out our videos and our articles online. We are taking clients. There is a link to the wait list in the description below. Click on that link and we'll get back to you as fast as we can.